Hello, this is Richard Pazin. It's 10:10 a.m. Eastern Time, August 20th, Tuesday, and this is the real estate portion of the report. I'm showing you a chart that's created by the National Association of REITs, NAREIT. I can't remember their website link, but you can look up, it's also referred to as the FTSE NAREIT Index. But what we have is that this is going all the way back to 1970s, and I've dovetailed this with some research that was done by Raymond Wheeler, who was showing that even climate has a relationship to the economy, business, stock market, and real estate. And he showed someone's real estate index that goes back to the year 1700s. And I found the same cyclical patterns, and that index hadn't been updated in many, many decades, but I brought it all the way up to where I could dovetail it to this particular index, as well as some other indexes and various real estate prices that we could find. And it does seem the cyclical model works. So what we have is back in 1970s, we have a 9-year cycle bottom, and the 9-year cycle doesn't work that well at times. Sometimes it's fantastic, and other times it just doesn't really work. In other words, it just kind of coasted in that 9-year cycle bottom, then exploded. And you'll see that on any cycle. If it coasts into it, it's like it refuses to do what you want. Then it's as if when it bottoms, then it's just going to speed up or speed lower for that bigger trend. From what I could tell, even going back to the year 1700s, basically it really likes 2 9-year cycles to make an 18-year cycle. And that's interesting. That's half of our 36-year cycle that we find in commodities, stock indexes, economic, business statistics. And but you can see that what we've done is a sequence that it ran from this 1970s to the bottom of the financial crisis of 2009 for a 36-year cycle. I'm tracing it out, bottom to top to bottom cycle. And we believe that it came off from a 72 and 36-year cycle top as well. So this is kind of like the stock market forecast. Now we can change that and show tops are more like commodities. It would be a 27 and a 54-year cycle top. Doesn't really matter to us at this point. The point is we've launched a new super cycle bull market for real estate, and it should last for into the 2030s, maybe no later than 2042. Okay. Now, inside of that should be the 9-year cycle. And basically what we're looking for is we've had a 9-year top in 2007, a 9-year bottom in 2009. The trend is up towards 2017, 2019, when we anticipate a top for the economy, stock market, commodities, just about anything and everything. And then we're going to roll over into a recession that might show up as late as 2020, perhaps even a year later than that. And then we're just going to rebuild, and the 2020s will probably even be better economically than the 2010s, or let's hope so. And we should have good stock and commodity markets, and I would think we're going to have a good real estate market, and that is the forecast. Now, where are we inside of this decade move? Meaning, yes, we anticipate higher real estate prices to near the end of this decade. Quite confident of it, highly confident, but not too confident. It just seems good probability it will work. We've had a very nice recovery here, not as well as the stock market. The stock market's at new record highs. This index is not, but it has recovered. We see some real estate that's actually already at new record highs because it never fell so far in the first place. But we see other real estate that's a long ways off from new record highs. I've found properties that were up unbelievably. Like I found some Gulf front lots that ran from 30,000 to 300,000, even 400,000, then crashed back to 30,000 to 40,000, at least a 90% crash from the high. But they did explode much higher than they ever should have done in a very brief time. So it did fit the idea that a 72-year cycle could create some kind of depression and an 80, 90, 70% collapse. We fixed our economy, so we wound up fixing the stock market so it wouldn't collapse, but the real estate collapsed anyways. We definitely have evidence of some real estate down as much as 90%, believe it or not. Okay, at any rate, the trend is up. We're bullish, at least for the rest of this decade. But what's this little negative reversal here for this year? Gapped higher, traded higher, returned. It's now even below the open of the year. That looks pretty negative to me. It's coming down, probably going to fill this gap. Well, there's such a thing of 3-year cycles, and with this annual chart, it's a little difficult to show them all. But we think there was a 3-year cycle in 2011, bottom, and it is due for bottom 2013 or 2014. The best we can tell when we break this down to the monthly number that we get for this REIT index, it says probably going to bottom in 2013. Therefore, it's probably trending higher into 2015. You will see still higher REITs in 2015. Now, REITs will act a little more like the stock market than real estate, but it still reflects some real estate. It will act more like the economy and stock market, however, a little bit more. But this gives us a clue of what's going on in the real estate. And when you look at things like Shiller Index and some of the other things you can find on the internet, watch some of the fluctuation like in Zillow.com, I believe it is. If you can find any kind of history, you're going to see similar patterns to this. So bottom line is even housing and offices and shopping malls and whatnot are liable to increase into 2015 for price. Now, can it go down into 2014? Yes, but I kind of doubt it. And you may want to take a look at the Dow Jones REIT Index, which we have on our quote system charting systems. I think it's down 17%. Maybe it's down even more than that. I think it's pulled off a 3-year cycle bottom, but it's already due for a 3-year cycle top, but it's already due for a 3-year cycle bottom. And that size of a decline is sizable enough to consider, yes, it's a 3-year cycle. And even that forecast for that REIT index, okay, and you can even buy stocks on it and not buy the real REIT, I think. And you might want to check on that. It may be just a fund of real REITs. But at any rate, it just looks like, yeah, probably real estate's going higher by 2015. So we got a nice pullback coming here, but it's probably a buy opportunity for at least REITs, if not real estate itself. So again, the forecast is bullish economy to near the end of this decade, bullish real estate to near the end of this decade. I think bullish for the next 20 to 30 years or so, but we can have sizable corrections at any time, of course. And then these 3-year cycles can make the more important corrections during a decade. And real estate is in one of those now, and it's correcting. But I think we've probably got a long-term buy opportunity anywhere from now, next few months. I'm not favoring early 2014, and like I say, I favor higher 2014 and 2015. I hope this has been some assistance. I think this has been working very well for us for a long time on these long-term trends, and I can't help but still be bullish real estate. Thank you.